AMBI.com. This is John. This report is for the 24th. Well, this chart tells it all. This is the 50K, 50,000 ticks of the ES. So, not yesterday, but the day before, Friday, we saw it was Friday, it was Monday, we saw the beginning of the decay there. And it kind of floated along the 50%, but I said that it wasn't likely to hold. And sure enough, look at that beautiful white, MBI white, taking the lead over magenta, already below. Every time you pivot below 25 on an MBI magenta, it's a no-brainer. It's pretty much, it's just broadcasting. The sellers are lined up and just waiting to break things lower. And then, of course, you had the meeting of DOC, cyan and green. Look at how close they get together, and then boom, the separation. And once that separation grows, and then it continues, you see, look at the expansion of the, and that expansion, boom, once it gets to its peak, you're at the end of that cycle run. Doesn't mean that your end of the trend is over, but it does mean that that cycle run is done. And then usually corresponds there, right? You get that 7.5 dip of the orange, crossover of steel above cyan, and then you need that steel though to rise all the way above 13.5 because that's the only plus that you're going to get from it. And you can see the nice little rise, which is why the little colored candle gets even darker there, because it's an indication that as soon as that goes below, you're going to get a fade back off of it. And sure enough, guess what happens? Yeah, you fade back off of it from there. Now, the fact that that also corresponds to the MBA white lead is exactly what you're looking for. And it progressed, and we came all the way back midway near to the 0 point right there. I was pretty close to even with that one from that stand, and then it bounced back and forth, but pretty much stayed right within that first periodic low. This was the exhaust low to see if there were any new uh, sell volume. There wasn't, so it held right around that point. But when you follow that expansion, you get the second wave of it going through, and then as it starts to narrow, you get the pump, and then it solidifies, and then boom, spread again, and you get the decrease. And so that's literally like that accordion effect that you can follow, and it's pretty clean. Very nice, straightforward, but likewise with the MBI, you can see it right there as the magenta gets crossed over. You see the imbalance shifts back to the short side. And, there was plenty of selling throughout all of that. Pretty clean from that standpoint. Now, intraday, look at how beautiful this looked. This was our pre-market, simple and clean all the way down, and then we get the nice buy signal of the pump. How pretty was that? And then boom, turn around and sell. Very clean, very efficient readings, and then just a little back and forth as it was negotiating the end there. Still wasn't a problem because those are still good runs. I mean, when you're talking from 69 all the way down to 31, yeah, anybody's going to take those repeatedly in one day. I mean, this was several hundred points that was very clean. So what are you going to do with that? Times a single contract, $15,000-$20,000 just on one contract per day is insane. But then you move into where we're at here in the post market. Here's just a bunch of noise right now. Nothing clean. So, you take a look at the previous day pre market and compare it to that, and it's like no question. I mean, look at how nice that one was, and now we're just in noise, and that's just because there's still uncertainty. Is the Iran thing going to fall apart? Looks like it will. History tells us it will. Can they do something different? And even if they do, does it guarantee that the strait stays open? Bitcoin, crypto's not convinced of anything, and certainly gold thinks that potentially there might be. So you're getting a sell-off. But what this sell-off in gold does is you're getting that spread between where the devaluation of the market is relative to its increase in price and gold as a relationship. And so when we reach that equilibrium point, then the market will have a much harder time. And of course, everyone's going to be keeping their eyes glued to the CPI values, and that is going to get helped, obviously, with the gold situation being eased off simply because you're going to have a reduction in somewhat of the rate of inflation. I don't necessarily think that the inflation is going to stop. You're just going to be reducing how fast that rate was increasing. And then we look at the beautiful situation with the euro. People are starting to recognize that, wow, they're really the U.S. is going to start pumping up in GDP value, and where's the Eurozone going? Literally nowhere. Fast, really fast, going nowhere, and going to stay that way. And the political turmoil is escalating. I mean, you see even now in Florence, Italy, and things like that. Very unsettled safety concerns, random migrant attacks, things like that, and uh, it's becoming a universal problem throughout Italy, throughout Germany, France. It's already documented well, Sweden, everywhere else. So, yeah, there's going to be a hot summer for Europeans, and we're in the middle of a massive heat wave. So, electricity demand and all that. And since they really don't have the oil for it, it's a problem. But hopefully, they're getting it here very shortly. Oil's still not broken that 70 barrier, and again, this is just still artificially high. So the dream of it coming down rapidly, fading, we'll see how the talks in Switzerland go with Vance. But unless there's some kind of breakthrough, now if there is, potentially you could see an additional drop. But again, you've got a lot of oil that needs to be bought up to make up for the time period that lagged and everyone used their strategic reserves. So I would expect an elevated price range on it for quite some time. Not that massive of fine. It looks great from the pump, but you're still paying quite a bit more than you were at the beginning of the year. That's just straight up truth, and that ripples. So that is an automatic inflationary boom going all the way across. We look at it from the daily standpoint. We talked about this. We expected the move towards the 76%. We knew that from an S&P standpoint it would break. This is the Nasdaq though, and it's not done. So Nasdaq's not looking right now. What you need to see in a conversion here would be the orange continuing to dip, steel rising, and a turnaround of the spread gap. If that spread gap continues to remain large and grows, then you will get a break of that. And just debating it, it is what it is. We expected that the S&P would break, and that the Nasdaq would end up being the support for it. And we can see that's why we stopped where we did on the S&P, simply because of the Nasdaq reached the 76%, and it caught a bit at that point. But that's spread gap right there. We talked about it when the first DOC started to break early in the morning, and once that accelerates, boom, you get a significant move. And then now we just watch our steel and orange from a daily standpoint. We're going to see it much earlier intraday, and people will get all confused and not understand the dynamics of what's going on. But we laid it all out exactly why we've seen what we've seen and why we're getting the chaos at this particular stage, and it shows pretty cleanly on the daily readings from the MBI as well as from the DOC, and that's why I started with the 50K chart to begin, simply because it just reflects a very clear understanding of what these dynamics are, and how that breakdown starts to build, and then it exacerbates over time. And then, of course, the 5Ks were clear evidence of it all. That's the long and the short of it for now. Anything relevant, I'll put on the team chat. Have a good one. Trade well.